Hello, my name is Vladimir Tikhomirov. I'm Chief Economist at BCS Global Markets, and I'll give you my macro view for the coming week. Perhaps there are two major themes that I want to highlight in this small presentation. One is political. Geopolitical risks have been one of significant, perhaps the most significant driver for the ruble and for a large part of the Russian market over the past few years. Over the past half year, we have seen increase in these geopolitical risks, partially driven by the change in U.S. administration. This week, in 2 days, U.S. is going to have a new president, and announcements of appointments to U.S. State Department made by Joe Biden indicate that potentially we are not likely to see any significant change in Russia policy on the U.S. side. In particular, Victoria Nuland, who is well known as she was one of the architects of Russia policy in Obama administration and one of persons behind the first rounds of sanctions imposed by the US against Russia. She is returning back to the State Department, and her experience and her role indicate that the likelihood of any significant softening in U.S. Position against Russia is very, very low. In addition to that, there are few other triggers. In particular, over the weekend, we have heard the news that Russian opposition leader Navalny, upon his arrival to Russia from Germany, was arrested in the airport. And this move has been already condemned by many European countries and the US. And this could be another potential trigger for a new wave of escalation in relations between Russia and the West. Just to remind that alleged poisoning of Navalny has been already seen by a number of countries, including some from Europe, as a factor to actually increase sanctions pressure against Russia. And these new developments could actually lead to significant escalation in the policy of the West against Russia, and could potentially lead to new sanctions, which is of course a very negative development for the Russian market and the ruble. Another big theme, and which is not only related to Russia but is actually global, and this is a return of inflation. In Russia, we have seen inflation basically doubling from last year levels. In early January, according to Russian Statistical Office, inflation was running at 5% year on year, exactly 2 times higher than inflation registered in January year 20. And although I still think that it's unlikely that this rise in inflation is going to trigger significant reaction on the part of the Russian central bank when it meets in February. I actually expect the bank to retain its monetary policy unchanged, but potentially over the next few months, the likelihood of tighter monetary policy from Russian central bank is actually rising. In fact, last week when central bank chief Nabiullina was making her presentation at the Gaidar Forum in Moscow, she said that the central bank should start thinking about normalization of its policy in order to have room for maneuver in case situation in the economy or in the political area becomes more tense in the coming months. By normalization, basically what I understand is that she was referring to at least positive real interest rates. while the current interest rate of the central bank is running in negative territory. So basically, that means that the central bank is starting to think about tightening its monetary policy sometime in the future. Again, I don't think that's a likely move on the short-term horizon, but on the medium in the medium term, I think that the likelihood of that is actually rising. So these are the two themes, politics and inflation, that I think would significantly affect Russian market moves and ruble moves in the coming weeks. That's all on my side. Thank you.